This is a quick series on why I will never pay off my mortgage, and how it might make sense for others to do the same. Check out the video description or top comment for the series playlist. Subscribe for more content like this. We focus on unconventional strategies to accelerate wealth growth.
So I still haven't put out a video of a full breakdown of my whole life policy, but here we're taking a look at what is called an in-force illustration on my policy after making 2 years of payments. And it's actually, I'm including here the internal rate of return, and as you can see, this doesn't look great when we look at my internal rate of return on the early side of things, but that's not what this policy is about. It's about the long-term returns, and you can see that this just grows. The first few years is the worst of it. In about 4 or 5 years, my policy will break even, and then after that, I should even out close to around 5% internal rate of return over the life of this policy. I'm talking, 60 years, until I'm over 100 years old. So more than 60 years. So that's really why I won't pay off a 2.25% mortgage when I can reasonably expect a return that is significantly more than that, and it's going to compound over time. Now, this is not a guarantee. There are guaranteed elements. It's somewhere between 2 to 3% of guaranteed crediting in this particular policy, but historically, this is pretty on point in terms of what I can reasonably expect in this whole life policy, and that is somewhere approaching a 5% internal rate of return over the life of the policy. And so as you can see here, I'm putting in $60,000 per year. It's showing nothing here because I've already made this payment. So I've made 2 payments of $60,000, and that results in my year 2 cash value being $101,365. So it looks bad starting out, but when we get further into this policy, we're looking at a year 5 break even. So I've put in $60,000 per year, and my internal rate of return is slightly in the positive, and then you can see from there it just climbs. So this is why I can get a return like this, and we'll jump into some of the rates that Penn Mutual has declared in their dividend over time. And so that's the thing about whole life. I've got a video breaking down whole life as using it as your private bank. You can check the video description if you want to see that video, but they declare a dividend rate and they credit your policy based on that. Now, it's not exact, so you can see here, this is the rates here are 3, 4, and maybe get to as much as 5% in the later years.
I don't come from wealth. I spent almost 9 years as enlisted Army infantry. I have no college degree. I've been investing pretty much my entire adult life, and there are things I wish I knew about years ago. Too many finance channels and forums focus on the same tired things, and I'm not saying you shouldn't do them, but I am here to show you some more tools to succeed. Drop a like if you found this video helpful, comment if you think I'm crazy, subscribe if you want to grow with me.